fancy meats and stuff tonight.
Did you ever want to do that?
Excuse me? You know, like cheese and crackers and stuff. But the nice stuff. I don't know, it's Publix, so I don't know how nice can it be. It's like some event that I get to go to and misses. You know, you've never had like a charcuterie board?
No.
$1,000 to you spell charcuterie. First thing okay. Hey, welcome to the closing beat, everybody. Happy Thursday. How we doing out there? Hope you're having a good day. Hey, it's our new fin tip set. It's kind of a work in progress still, but I don't know. It's coming along, man. You know, we work quick around here. So I thank you for joining us here and hanging out with us a little bit early. We're a little different today because I do have an event to go to. So looking forward to that. And also our Wine and Wealth class for clients is actually up, fully recorded, put it up there. And we're talking about some of the tactics that the rich use in their taxable accounts, like how specifically does that work? And so we'll be going through that. It's actually available for research members as well. If you'd like to join us on the research site, you're welcome to do that. It's $13 a month for those of you that are not clients. If you are a client, then it is included for free, of course. Hey, Kirk and John, welcome. Yeah, a little early today, but we're doing our thing, and we're going to get through it. We're going to talk about the stock market today, because that's what we do. We're financial advisors that have no other hobbies besides the stock market. We manage our own portfolios here, and we don't put you in mutual funds and garbage like that, but we also help anything to help you keep your dough straight, because that's important. So think of us as like your financial right-hand man for anything while we're focused on your long-term investments. All right, so we're going to make it quick, but really, really interesting today. Got some cool stuff for you, so let's dive in, actually. Yeah, that's where we're at. The Russell. Actually, this is kind of interesting. So the Russell was the leader today. It's third place year to date. It's been a little bit quiet since the early year run. And now, look at this. For the technical traders out there, you find yourself in one of these interesting patterns here. You got a series of lower highs and a series of higher lows after being in a consolidation here. So now the point where the Russell wakes up again, I'm not saying higher or lower, but the point that it wakes up is actually pretty clearly defined. You've got the high of this range here where technical traders will say, okay, all clear, let's go, we're breaking the new highs. And then down here you have this, 2180 or so, same thing. They'll say, all right, man, we're breaking down, let's get this thing on the way. And so the Russell is finding itself backed into a corner or a wedge, I guess, if you want to call it that. A couple names that stick out here today. U.S. Silica, SLCA is a ticker symbol, breaking out of a downtrend there, kind of interesting. I thought they might sell part of their business, and that's the reason why it's up 15% on the day. Breaking the downtrend is basically what I wanted to show you there. You got American Superconductor here. This loses a point. It's a breakout, but it's in a downtrend already. So look what happened. You got a whole consolidation or a whole downtrend here. Little by little, attempts to break the downtrend. It failed, unsuccessful, and then it goes sideways. So it finds a floor. It finds its support area there, consolidates for a little bit. Today it breaks out there. And so that, like I said, it loses a point because it's in a downtrend. You like to see breakouts at the top of an uptrend there, but that's maybe on the radar there, slightly above average volume there. Realogy, RLGY is another one, broke out, but it did give back a lot of it throughout the day. This is the company that owns the brands like Sotheby's and Better Homes and Gardens, Realty, Century 21, Caldwell Banker, things like that. They basically own all the names. That one broke out. I thought that was kind of interesting there. I didn't really catch any news on it or anything, but those were some of the stocks that helped you out today, get the Russell back towards the top of what eventually could be a little bit of a breakout there of a sort of a wedge pattern. Anyways, the Nasdaq was really strong today, thanks mostly in part to nothing in particular. It was a broad rally, right? Just a real broad rally going across the board there. There was a couple names that stood out, and not for any real bad news, like Netflix took the day off. That's understandable. This has been strong through the whole entire pullback here in the market. Had a 7% gain in the last 1 month, so if it's going to pull back a little bit, nobody really cares, but not a big deal there. Facebook couldn't get anything started here today, kind of like their servers the other day, and that's what is going on with Facebook. Down about 1% on the day. And continuing this downtrend, I would argue 320, under 320, looks like something that technical traders are looking for. Mondelez taking a break. I don't really care because I'm already out of that position, but rally back to the 200-day, and that's its new short-term resistance area there if you're paying attention. And also Chinese names. Pinduoduo, JD.com. Look at some of the gains on these today. 6% across the board. Baidu, Alibaba, all good days there. Security diplomat for China had a conversation with the White House. Apparently that went well. And you have President Biden wanting to talk with Xi Jinping of China at some point before now and the end of the year, have like a Zoom meeting or something like that. It's not going to be a meeting in person. And they've agreed to that, so that's pretty cool. And thus you have a reason to believe that maybe this is the first real attempt at a bottom in the Chinese stocks. Wouldn't be right if we didn't point out the semiconductors here. I'll look at Xilinx, one of the stronger names that broke to new highs here today. There was a lot of good stuff there. AMD up 3% on the day, stronger across the board. If you look at semiconductors, nice gap up in the SMH, which is the ETF that tracks all of that. I wouldn't say that it's a confirmed bottom just yet, but you like where it bounced off of there, and hopefully that continues. If we look at the S&P 500, of course, you got a little bit of a rally there. 5 of the last 6 days have been greater than 1% moves, plus or minus. I'm going to share some stats with you in a second there. First place year to date, of course, and it gets good support from the bigger contributors today. You've got Apple. Obviously, decent little rally there. Amazon, you got a little rally. So some of the bigger contributors, the bigger weighted stocks in the S&P helping everything out. Microsoft is to touch over the 50-day. So, and Alphabet. You got to point out Alphabet as well. Same thing, just over the 50-day, trying to help. And the bigger contributors for the day. Consumer discretionary, you could use the XLY to take a look at that, but the consumer discretionary sector overall had the biggest gainers today. Penn National, PENN up 5% on the day. Didn't catch any news there. Ford hitting new highs after breaking the downtrend. All right, so it breaks a downtrend here, gets that little first rally. If you miss it, you stay away, no problem. You don't chase the first rally. You wait for the pullback. There you go. You get your first pullback that has been proven to be successful there. eBay also hitting a little bit higher on the day. Not quite to new highs just yet, but that's what you have. And the oil names, got to point out the oil names today. If you're looking through the list of stocks making with the biggest moves on the day, Schlumberger, that's not an impressive short-term pattern there, but you got Schlumberger, Apache, nice little move there. And so as you dig through, look at some of the oil stocks that refuse to pull back. You know why? Look at the price of oil, up another 1.8% today. Oil is going over $80 a barrel, it seems there. Yesterday, there was news that one of you guys thankfully pointed out about the White House releasing reserves. Today, the White House said, or the Energy Secretary said, we have no plans to do that. And so you saw oil pulling back early in the day, and then all of a sudden, bam, that's it. They want the price of oil higher. It's total, makes perfect sense here. Think of all the time that the last year and a half that they went through where oil companies weren't making any money. Everybody needs to make a little bit of money for a while to recover from all of that, start reinstating their dividends and all of that. Not to mention the big deal that they're trying to pass, $3.5 trillion plus the $1.5 trillion, all that stuff. They're trying to pass that focused on green energy. Well, nobody's going to be excited about green energy if gas prices are cheap, right? You're not going to go buy a newly subsidized sort of electric vehicle from General Motors and everything like they're talking about if gas doesn't cost you that much. So there's a play here, right? And I'm not saying it's a conspiracy or anything. There's a legitimate play to keep oil prices high for a while, both to help the energy companies and let them make a little bit of a profit because they've struggled for a while, but also to get you more to go, geez, I'm not spending that much on gas. That's ridiculous. I wonder if there's another option. And soon enough, you're all driving the electric cars there. So there you go. There's your lesson. The Dow, mostly a broad rally here today. I do want to point out that United Health was one of the leaders today, about a 2.5% gain on the day, and Home Depot was the other ones that led the way today, despite taking 9 months to get my cabinets for my house there. I'm not complaining. I'm just upset. Excuse me. Caterpillar up 2% on the day. Really reversed all of yesterday. I thought that was kind of interesting there. Shakes off everything that it tried to, or that it fought yesterday. And Nike up 2%, maybe finding a little bit of short-term support around the 200-day moving average. If you're playing Guess the Dow, well, I thank you for playing Guess the Dow. I hope you get a chance to win. You can play every week. You can win multiple weeks. Doesn't matter to us, but Cody's going to tell us who is in the lead.
Yeah, your last leaderboard of the week. We got 2 clients at the top. We got Johnny and Peter, and the rest are Jerry, Eddie, and Peter. So those are your top 5. Last leaderboard of the week before we announce a winner tomorrow.
What you got in your bottle there?
That's just water.
Ooh, exciting.
It always is.
Exciting.
Always is.
You don't know, but that man right there, he's ripped.
Shredded.
He totally shredded. Totally shredded. Committed to the craft, man. I like it. All right, so you can play Guess the Dow if you like, but let's go over here real quick. The S&P, 5 of the last 6 days having a 1% or greater move, and I'd like to share that with you here. We just ended a 5-day streak. If you look up on the screen here, this was the last 5 days, not including today. You can see plus or minus 1% each day. A bit of a Christmas tree type trading there. If you go back 5 days, down 1, up 1, down 1, up 1, down 1. Well, it's a 5-day streak. That's actually not anything special there. It's not odd in any way. In fact, you go back just a little bit. Here's during the COVID decline from March 2020, the beginning, through the middle of March. Maybe you remember some of this. There were a streak of 13 days. Yeah, that's 13 days there, where every day was actually almost greater than 3%. There's only a couple days here where you got down 1%, down 2%. Every other day was greater than 3%. Up or down. That's a 13-day streak. The record was actually set in 2002. If you're looking back all the way to World War II, the record was set in 2002, 15 days, which, by the way, was close to the bottom of the market at that time. But nonetheless, you have these streaks, and so it made me think, is that normal, like to have that? Do we just frequently have streaks of 10 days and then it calms down and then for a while it gets exciting and all that? So Cody took it a little bit further here, and here is the percentage of days by month that have a 1% plus or minus gain or loss. Here you go. So we rank them by month. Wouldn't you know it, October, 25% of days in October have a 1% greater gain or loss, right? Or something more than that. Can have a big up or down day. Let's just say big up or down day, so this makes it easy for me here. All right. So October, we know, is technically, we could say, the most volatile month if we're using this metric. So the fact that 1/4 of all days are a big up or down day now makes you go, well, this is not odd. What's happening currently in October? A 5-day streak. It's like, come on, that's not even, or that's almost exactly what the stats should say. We essentially just got them over with. But one of those days was September, right? Yeah, September. So we had a 4-day streak in the month of October. All right. So normally, if you look throughout a year, if we take every single year going all the way back to World War II, in the year, 20.5% of days are big up days, up or down, doesn't matter. We're just saying give us anything greater than 1%, anything less than 1%. So what you can see is an obvious trend here. October and November are the exciting months before December. December is the least exciting month in terms of having 1% up or down days. That's very normal, actually. If you've never traded the markets during December, well, hang on. You're going to see a whole lot of nothing happen there. Other than that, the beginning of the year ranks as exciting as well. January is known, actually the first day of the year, every year, is historically the most volatile day of the year. But those rank as that being also more active, and that makes sense. Beginning of the year, new resolutions, we're selling off positions now that tax day is over with or the end of the calendar year is over with, and then you can kind of see the other months. Now, to take it one step further, this is not saying that every day is 25% or 25% of the time is up 1% or more. It could be up or down, right? So I got a little good news for you. If we break it down by which percentage of days had a gain of more than 1% versus which percent had a loss of more than 1%, here we go. In October, that's actually the best in terms of having 1% up days. So even though it's more volatile, you tend to see a slight bit more 1% or greater gains versus losses. So you got 13.8% of the time, it's a 1% gain, or 2 or 3 or whatever. And then 11% of the time, you have the 1% loss or more, these two totaling up to 25%. You can see that November ranks, of course, in second. This is just the same chart, but broken down by positive or negative. Where November ranks in second, also more positive. So the bias leans to the upside, which I don't think is a surprise for many of you there. But there are some negative days along. And then as you go into December, it's the same concept, right? Total, we have less big up or down days, but they lean more positive than negative if you look back far enough. Was there one? I think it was September. So September is the only, September and June, right? Where the negative days, September and June, and I think that, and August. Yeah, so there's a handful of months where negative type leans in there. Sell in May and go away. You get that one there. That makes sense. And then September, which, being the volatile month of September that we just went through and went over all those stats, you can actually see in there. So the good news is, even though October, it has more big days, the bias tends to lean to the upside. You get my drift? Hopefully that makes sense there. Yeah, we're a little bit early, Chris. Today, a little bit early there. First time Matt comes back and we start early. I missed it. I think you can hit the rewind button there, and I hope you do. New highs and lows for the day. There are 28 new highs, 3 new lows. Lamb Weston, one of the new lows that broke down. Wild day for Lamb Weston there. Earnings miss, right? Just flat out missed on earnings. They have inflation pressures. They have labor issues. They've got supply issues. They just threw the kitchen sink at this one and said, this is just horrible what's going on there. Lowered their guidance going forward. That stock had a rough day there, making new lows. Intercontinental Exchange, the breakout we talked about yesterday, that one's leaving you in the dust, man. Refused to pull back. Very strong day. Anytime a stock has that kind of a strong day and closes near highs, you got to at least put it on a watch list. One to look at. I got to point out McDonald's, right? I was just talking about this yesterday. Nice, tight, quiet, sort of sneaky uptrend there. That hits new highs on the day. And Ameriprise, Prudential, Raymond James, Principal. Look through financials. A lot of financials hit new highs. I just put up a few for you. You've got breakout here on Ameriprise. Prudential was the other one I just mentioned. There you go. Similar pattern here. The rest of them aren't necessarily breakouts, but Raymond James, Principal, and is it SIVB? It is, SVB Bank. That's the same thing, kind of a little breakout there. There's a whole list of stocks you might be interested in if you like playing momentum in the banking stocks. Speaking of stocks, let's talk about some stocks in the news here today. Citrix. So Citrix gets a new CEO, by the way. I think they kept their guidance the same. They got a new CEO, hence the volatile day here today. Apple, Dutch government says that the App Store is anti-competitive. Apple says, we don't care. Stock was higher by 0.9% on the day. Costco sales, awesome. They do great, man. Costco sales up 9%, right? I think I remember. They see growth of sales of 9.4%. Come on. This is like repetitive. Every time they announce it, man, it's just the stock is higher. And it's because they got the sales, General Motors here, they're going to double revenues and expand their total profit margins at the expense of Tesla. The world is coming after Tesla. In fact, seems like the White House is coming after Tesla because they're not inviting them to any of their get-togethers on electric vehicles and how we're going to do all this. So I would assume that would upset Tesla a little bit. Nonetheless, the White House has taken sides and said, General Motors and Ford and I believe Nissan, we're going to play with you guys instead. So General Motors says by 2030, we will have better margins. We're going to expand our sales, our marketing pitches, our electric vehicles. All is going to be great. We're going to spend a lot of money and taxpayers are probably going to pay for it, but that's a whole separate story. Levi, let's talk about that. Beats on earnings and revenue. They're going to buy $200 billion back in shares. Remember, I told you that. If they're about to all get taxed on buying back shares, they're just going to start buying back shares. That's good for the stocks in themselves, right? Stocks tend to rise during share buybacks, which is helpful, of course. But you're just going to see more and more of that. There's no way around it there. Last one here, we've got NEO, about 7% higher on the day. Goldman Sachs says NEO is worth $56. That puts it up here. I think it's going to make almost new highs there. So we'll see what happens there. It's another name it's not really, it's competing with Tesla, but not at the same level as like a Ford or GM wants to compete with Tesla there. Also, I don't know how this affects Finland and Sweden. If you look at Moderna, yesterday we talked about Finland and Sweden there, pausing the vaccines there. No, it was Denmark and Sweden. Finland has joined the groups there and said, yeah, we're not going to have some people get this the Moderna vaccine. Didn't seem to matter with Moderna today. It seems like it's snowballing against them a little bit, but the stock's pretty much priced in. I think that in the meantime. And that's basically the stocks in the news here today. We will see what happens tomorrow there. Costco, yeah, they do good work, man. They do good work. They know their numbers. And they hardly miss there. Yeah. Are there any, there's no earnings tomorrow, nothing interesting. Earnings season will start in a week and a couple days. with JP Morgan and such. We're going to do a research post on how the sectors perform around earnings in general through the earnings season there. Just give you an idea of which areas you might want to avoid, which areas are more volatile, things like that. Yep. I love it, man. Americans don't want electric cars. Well, we can't all have electric cars. I'll keep saying the same thing. We can't all go this way. You know, we can have a mix and we can all slowly move towards something, but yeah, you can't do it. There's no way it makes sense. Yeah. That's such a tough one there. Jacob says he's got November 19th, $35 calls for Oxy. So let's have a look here. So you got the $35 calls. So you bought the calls, I believe is what you're saying. Am I correct? I don't know why there's an alert set here for that one, but there we go. $35 calls, sell it, hold it. Obviously, if it were me, I don't like buying out of the money calls. So if you bought them and you're hoping for 35, to me, this is pretty close. I don't know when you bought them, but to me, I'm going to say you're not supposed to consistently make money by buying calls. And the fact that you likely are making a few dollars there, I'd probably take at least most of it and run. Just remember, you want to buy calls at the money. Right? You could take a lottery shot every now and then, you know, if you think there's some like big short squeeze comment or some news event, yeah, you can take a shot. But you don't want to try to make a consistent move living out of buying calls. Comments on Facebook? I think I said that earlier there. To me, Facebook around a 320 area, if you can get it even under, it'd be great. You've got a handful of technical patterns. The Fibonacci traders, they'll get their support. Your technical traders, they'll get their 200-day moving average. Your pullback traders at that point, right here, you it's almost 20%. Not quite there. Where do you got to get to? About 309, about 309 to get the 20% there. So think of it in a range. If you're looking for the place where the most amount of people would be excited, it's going to be right there, a little poke below the 200-day. Yeah, I like it. Hey, Mr. Bishop says, if a stock announced for the past few months that it will maintain the dividend and has not made such announcements in the past years, is that an indicator of pressure to reduce the dividend? If I understand you right, so a stock is saying for the past few months they're going to keep their dividend, and they've never done that before. Was there pressure to reduce the dividend? I would think it'd be the other way around. They're likely trying to stop the pressure of raise your dividend. You guys have cash. They're probably weighing the idea of doing a share buyback, but they want to see what the rules are or what the laws change to be, if that's the case. Because if you go back a couple months, that's when we started this whole nonsense of, well, we're going to charge 2% or whatever it is, tax on share buybacks. So they probably said, we're going to keep our dividend, see if we can buy back some shares. Maybe that could be it. Yeah. Yep. Strength in the Chinese names today was a meeting between the, I forget what his title is, but a security chief over in China with the White House, and it went nice. They had some good things to say. There was no talk of delisting. There was no talk of more regulation. So it wasn't a lot of news, but it was good news for those stocks that have really been under pressure. Yeah. Well, if you could get the market to really have a sustained and broad pullback, that would do it. I mean, Facebook's already shown it's weak for against a market pullback. So if it could get a little bit more, think about what happens there. It's already weak and pulling back. Stock market had a little bit of a pullback there. You have people that are contemplating should they get out. They've just bought at random points. But they're contemplating should they get out. If the market starts to get weak, or if that were to happen, at this point, now you have people going, that's it. The market's getting weak. I'm out. They'll just sell. That would add more pressure to it. So that could be a good thing. Yeah. Nice. Well, we'll see. We'll see what happens. I got you fired up about the old China now. I like it. No, not starting earlier going forward. Just the one day here today. I had to start early because I've got somewhere to be and I've got to hurry up and get there. So I thought if I could get a head start, that would do the trick. And it worked. I will wrap it up from here and get out of the way. Appreciate all your support. And enjoy the rest of your day. All right? Appreciate it. See you guys later.